Bitcoin emergency update. I was anticipating that Bitcoin was likely to hit 30,000, but with the new technical information that we're going to simplify today, it looks like the high may be in and that the correction may be beginning already. So it should be sideways to down for a number of weeks. Now, technical analysis and everything in life is difficult before it's easy. But today we're going to simplify it. So if you've got value from today, like, subscribe, hit the bell notifications, support the channel. I really do appreciate it. So looking at Bitcoin, markets tend to move in fives and threes. You heard me say it a million times before if you heard my content. And we've got this 1, 2, 3, 4, 5-wave impulsive move. And typically, after a wave 5 is confirmed, what you normally get is a correction. It's like a sprinter doing a sprint, runs out of breath, and it needs a recovery period. It needs a rest period. And that's normally a nice recovery correction. So we're going to lean on a couple of factors today because we don't want to just lean on Elliott waves, which is the 5-wave count. We want to also lean on indicators that can help us identify tops and bottoms that are highly probable. My favorite by far is the Stochastics RSI. This thousands of indicators, this is one of my favorites. It's basically when the blue line goes below the red. Blue line goes below the red. And what's likely happening right now over the next 1 or 2 weeks, the blue line is probably going to go below the red. What's the correlation? Well, if it correlates nicely with price highs in the zones, now it's not perfect. Like this one, it made another high over here, but you can see overall it was sideways to down as it was sideways to down. So where is the momentum on the weekly chart? So this is like a macro viewpoint. We're looking at the crowd psychology almost on a grander scale, like weeks and months of data. So we're likely to see this being at or near a top that's going to last a number of weeks, maybe even a couple of months before it gets exceeded. So now let's just break down a few more factors. You may have heard of something called bearish divergence. It tells us or indicates to us early when the market is running out of steam, either on the upside or the downside. And one of the ways of identifying that, and it hasn't happened yet, but if I just draw this out for you really, really clearly, if this turns like this over the next couple of weeks, and then this blue line does go below the red, like so, what we have on our hands is the momentum. If you look at the crossover point here, and the crossover, which hasn't happened on this time frame, is pointing downwards, as in the momentum is getting lower. But look at the price. The price has been going higher. Now, when they're not supporting each other, price is going up, so it looks like there's more power coming into the market, but the momentum is slowing down, and that's what you call bearish divergence. That's also another clue that we might be at, or definitely near, a top that may last for a number of weeks. So what we're going to do next is we're going to drop down to a daily chart. So we're on a weekly chart. I want to drop down now to a daily chart and just zoom in to the last part of the move, the last part, which is what we're referring to as the wave 5. This wave 4 to the wave 5, this move to the upside. Now we're on a daily chart. We can again lean on the momentum. It's not perfect, but it gives us a big clue on what's likely occurring with the market. So we had this bearish reversal over here, and it coincided nicely with this top. Only a little correction. It made another high and then another correction. But what do we notice in regards to bearish divergence again on a daily time frame? Do you notice anything? Well, if we look at this crossover point and this crossover point, this is from today, or as of yesterday, you can see it's going lower. But what has the price done since? From here to here, it's gone higher. So what this indicates, and you can almost just see it with the market structure, the price structure, it's like the market is struggling. It looks like it's struggling to go to higher highs, and that's another indication. Now, there's never any guarantees with price action. We can only identify what is highly probable and then go with that probability. So we're going to do a couple of things today. So let me just hide all this data first so we can see this. And I want to make this even clearer. So when we're looking at the price of Bitcoin, this move looks pretty aggressive, right? Pretty aggressive. Now, we refer to that as a wave 1. Now, wave 3s, more often than not, we're talking about 70, 80, 90% of the time, are bigger than wave 1s. But this wave 3, this next move, is less than this wave one. That's a sign of weakness. And then this final move, this here, is even smaller again. So it looks like the market is running out of, short term at least, buying power. Buying power, bearish divergence, we got pattern, and then we're going to look at a few other factors as well. So one of the things that I personally love to use that really, let me just pull this back on, that really helps me is double time frame momentum. In other words, where the momentum on two different time frames are indicating the same thing. So what do we have? If you look at the dashboard at the bottom, I create this dashboard. I call it the trend identifier dashboard. Now, it's not designed to be used by itself in isolation. It's designed to be used in correlation or in confluence of events with Elliott wave theory in terms of the fives and the threes, and Fibonacci price and Fibonacci time. So it's an extra piece of the jigsaw puzzle to increase the probability. And what this does for me is it summarizes what we saw on the weekly chart. It tells me it's strong overbought, and in English, what that means is upside is limited. So when you see that, it just indicates that the weekly top is either in or near, right? When it's overbought. That just means that the buying power is running out. That's what it means. And then when we look at the daily, based on this blue line going below the red, it says bear. Bear means down. It's indicating the momentum is down right now, as of right now. And that indicates that we're going to have a downtrend momentum. Now, momentum is different to price because it measures rate of change. But it correlates more often than not, especially like a nice trending chart like this, correlates nicely with price. So that allows us to see what should we consider doing. So what I've done over here on the dashboard, what to do, I use this myself, built it for myself, but I've also now made it available to you as students, is what to do is consider selling. But not just based on momentum. We also want to look at pattern position. So let's just lean back on the pattern position. And by the way, if you want to check out the trend identifier, you can now actually test it out for £1. We're actually going to be only doing this for a short period of time because we're going to include it on some of the new training that we're providing. But if you want to test it out, it's £1, 30 days, full training. But again, it's not, even though it's buy and sell signals, it's based on momentum and it's designed to be used in correlation with other factors. So, if you're just looking for a buy sell signal, black box system, this is not it. It's in conjunction with at least Elliott waves and ideally Fibonacci price as well. So when I'm looking at this, let's just now focus. Let's just get rid of the price data for a second. Get rid of this price data. And what I'm going to do, I'm going to zoom out. And we'll just bring in the chart data like so. And we want to just look at what is the high probability outcome for Bitcoin. Now, we've been anticipating a top. We anticipated this was likely to be a top. And we did get a nice move down. But it ended up only being a correction. And then we did make a new high. What do? We just reevaluate. And we say, right, now it looks like there was a spurt of, how long was this? This was from almost a month's worth, at least 3 weeks worth of panic buying. Panic buying being, it's typical of wave 5. When you have an explosive buying frenzy, but wave 5s are weaker than wave 3. And when wave 5s are overextended, you tend to typically get a big correction. So these are all signs that we're probably going to get a correction in Bitcoin, which we have been anticipating for a little while. Again, the way I like to think about it is a train is due to arrive. It was due to arrive a little while ago, and it's running late. So the correction is running late, and it's overdue. And when that happens, it tends to be relatively extreme. So it doesn't mean it's guaranteed, but it just means it's highly likely. So let's just summarize this information. Again, just so you know what I'm doing here, I've just hidden the price data and just got the drawings on the chart, just so we can simplify what we're looking at. This is the higher probability Elliott wave count when it comes to Bitcoin, and we're measuring in a practical, logical, objective way crowd psychology. So first question that I want to ask you, or we should be asking ourselves, is what would be the first very strong early confirmation that Bitcoin is indeed going through a correction of some degree? And the answer is, and you can pause this right now and just point to the screen and say, what should happen before I tell you. So what we're looking for, and you may have spotted it, is the price going below this in the green, wave 4 of wave 5, or should I say a potential wave 4 of wave 5, swing low. If Bitcoin's price goes below this, and the price point is 26,500 thereabouts, if Bitcoin goes below that and closes below that, that's going to be a strong indication that we're probably going to be sideways to down in a longer correction for maybe 3, 4, 5, 6, 7, 8 weeks, maybe end of April, maybe even going into May. So let's just now look at that on that basis. So we're going to, again, it's not confirmed yet, but let's just say the correction is in and that top's going to hold. What is the typical time and price? So what I like to do is look at, if we're wrong, what's the minimum that Bitcoin is likely to do, or any market? And if it's right, that it is a longer degree correction, what is the market going to do? So in other words, we're going to focus on the green, so the green drawing, and then we're going to focus on the red. So the green is the shorter term wave count, like this last part. And markets, more often than not, and if you can ingrain this into your mind, tend to move in 5s and 3s. Okay, that's oversimplification of Elliott waves. Elliott waves, there's multiple degrees of wave counts, there's waves within waves, there's different types of corrections. But Leonardo da Vinci said, simplicity is the ultimate sophistication. So let's just keep it practical, let's keep it simple. So 3s typically comes after a 5. So what's the absolute minimum that should occur with Bitcoin? More than likely. So if I just grab green, let's just draw it on, it's going to be some type of 3-wave correction to this move, this green move to the upside. However, at this point, we will need to look at how it's unfolding, the pattern structure, the wave structure, the momentum position of the market to tell us, are we likely then to see a continuation to the downside, or is this just going to be some type of correction and then we actually get another high, which is unlikely but possible. So that's the minimum expectations. So now if we go to the red, let's just now, I'll keep the same drawing, let me just make it into red. What is the bigger expectation, should I say? Well, at this point, we will get a lot of information on what the market does next. And if it continues to the downside and does some type of 5-wave move, then we should anticipate a 3-wave correction and then another move to the downside. In other words, an A, B, C as a minimum. And what I'm going to do next is I'm going to show you how you can get a price target. Now we've got a target. What we're looking at is what is most typical and most common. And then we want to have a strategy on trading what's most typical and most common. In other words, what is most highly probable based on momentum, pattern, price, and time. So when I'm looking at this, I'll show you how I do it. I'm gonna really simplify it for you as well. Now, TradingView is fantastic because it's got. Actually, I might have done it already. Let me delete this and I'll show you just very quickly how we do it. So there's something called a fib retracement. We're going to click this low. And again, let me bring up the price data again, just to make sure we're getting the accurate information. We're going to click this low to this high. And a typical correction is more often than not 50, 62, and 78.6%. And how long it takes, just to give us a bit of a feel. Now, this top is not confirmed yet, so getting a bit ahead of ourselves. But we're likely, because the bearish reversal on the daily, we're probably going to get a follow through of some sort. I'll just leave it like this. So now you'll see this is the high probability price and time zone. In other words, Bitcoin is likely to retest the $22,000 level and might even overextend into the $18,000 level. And the typical length of time, this is just pure math, right? This is pure math based on how long it takes for a recovery or a rest period. Again, think of it like, I just like to simplify it for myself. Whether it's a racing car that's gone through a very aggressive race, right? And it's put its foot to the metal, accelerating hard, really testing that engine, and it's had a long race. It's like, okay, now the car needs work, and we need to rest the car, we need to refuel, we need to get the oil in, we need to replace the tires, etc. How long does that take? Well, when it comes to markets and crowd psychology, the typical minimum time is something called 38.2% retracement. In other words, we measure how long did it take for this sprint, and it's not confirmed that it's over yet, it's just looking likely. And then we project into the future 38.2% of that amount of time and 62%. And that's this green and the red line. That just gives us a minimum and typical. Now it can go beyond and it can happen earlier, but we'll get a big clue, because if we get a big move to the downside, some people may think that's the end of the correction of Bitcoin. But if it's really far away from this, it's unlikely. We're probably going to get another move and another leg. And that can be really, really useful and valuable information when we're reading the markets. So there you have it. So that's Bitcoin. That's what I'm anticipating. So now, I was last few days anticipating some new highs, but looking at literally this new bearish reversal as of this morning, this bearish reversal, we got bearish divergence, price has gone higher, but the momentum has gone lower. Hopefully you can see that clearly. Let me just move it like so. In fact, it might be easier if I just keep it like that. So bearish divergence. We're close to price. We got a pattern. Pattern is pretty clear. So if we do get a follow through, let me just confirm this for you. If we do get a follow through, and hear my words, it's an if, this will be the first clear indication, which is a swing low. And then this one would be even stronger. And then if the move to the downside over the next 5, 6, 7, 8, 9, 10 days is impulsive, in other words, it's a non-overlapping structure, like so, that would also be a strong indication that this is the first leg of the correction, and that we're probably going to get some type of move up and then a second leg to the downside, because it's 5s and 3s as a minimum that typically occurs with Bitcoin. So if you want to check out the trend identifier, it's in the link below. Check it out, because it's a really, really powerful tool. Again, it's not perfect, and it's not to be used by itself. It's to be used in conjunction with at least whatever you currently use, even if it's chart patterns like double tops and double bottoms, and I don't really use those, or support and resistance lines or trend lines, etc., etc. That's all fine. I personally love to use it with Elliott waves and Fibonacci price as a minimum, and then Fibonacci time can be a really, really powerful resource for us. So share today's video, like, subscribe, support the channel. Let's finish on a quote, and it's from Vincent van Gogh, the genius artist. For great things do not, let me start again. For great things do not done just happen. Hold on. Do not, let me just make sure I'm reading this correct. For great things do not done, I don't know if that's a misspelling. Let me just read it again. Let me read. For great things do not just happen. I don't think that word "done" supposed to be there. You can let me confirm. Tell me in the comments. Should this word "done" be there? All right. Let's start again. For great things do not just happen by impulse, but by a succession of small things linked together. I learned something a while back called the Kaizen theory. It's a Japanese philosophy, so to speak, and it's about improving 1% at a time. You've also heard Rome weren't built in a day, and it's to not try and learn Elliott waves in one night or get the hang of momentum indicators in one night. It's for great things do not just happen by impulse, but are a succession of small things linked together. I remember another guy once said to me, said, Jagir, most people overestimate what they can do short term and underestimate what they can achieve long term. And I believe that's what Vincent van Gogh is trying to tell us in this particular quote. So if you like today's content, like, subscribe, hit the bell notification. Let's keep a very close eye on Bitcoin and see if we do get a follow through to the downside. It's likely based on the momentum, pattern, price, and time. But again, the price will ultimately tell us how the crowd is feeling.